It's about that time of day again. My name is Joseph. Tuesday evening, February 27th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude is bearish with almost 4 legs lower, but the real clue came from the last candlestick of today's session, giving me a big clue for a trading range ahead of tomorrow's weekly inventory report. The S&P is bearish with a channel. Kind of a multi-tiered channel on the Emini, I might add. And I have my eye on a measured move target and be looking for selling opportunities up at resistance levels tomorrow morning. The Nasdaq is bearish, and a shallow, almost flat spike in channel pattern is telling us exactly where to look for selling opportunities, looking for traps and buyer failures in the NQ tomorrow. Gold is bearish and trying to retest January's low. As we wrap up this month, makes for a great target on the yellow metal. And I'm watching a key reversal line just below 25s for selling opportunities tomorrow morning. And don't forget about that euro. The euro appears to be pretty bearish at first glance, but trying to break out of yesterday's trading range, not so fast. I'm watching the 2-try rule for possible buying opportunities going right back into the range tomorrow morning. Boy, do I have a great end of the month newsletter in store for you guys and gals tonight. We get the last day of February tomorrow morning. We got some big news on the calendar. We got some range breakouts, maybe failed breakouts, and we got some big reversals that we saw right in the wake of the Fed speaker this morning. I'm going to go over all the details with you guys tonight on tonight's newsletter video. Before I jump in, though, and put the plan together for Wednesday's end of the month session, I want to remind you, if you're on the YouTube channel right now, please go ahead and subscribe to the YouTube channel. Hit the bell icon. That way you always get notified when I publish a new video. And don't forget, if you have any questions about anything we're talking about here tonight on the video, if you're on YouTube, just drop those questions in the comment section below, and I'll be sure to holler back at you as soon as possible. If you're here on the blog at sidewaysmarkets.com, don't forget this is where all the action happens every day. Sideways Markets is our main trading blog. You can find all of the links to get all this information inside the description of that YouTube video. If you're already here on the blog, though, make sure you join our mailing list in the upper left-hand corner, right? You'll never miss another newsletter, psychology video, and I get a couple new video series I'm working on right now for YouTube. You'll never miss another great lesson. Join that mailing list in the upper left-hand corner. In the lower left-hand corner, don't forget to follow me on social. I'm always posting exclusive charts, links, and updates that you won't see anywhere else on any of my other channels, right? Follow me on StockTwits, Twitter, Facebook, LinkedIn for important charts, linked, and updates throughout the week. And speaking of charts, how easy is this? All the charts from tonight's video, you can have them on your computer ready to use for your trading tomorrow. Follow that link below the video where you can download all those charts. And speaking of tomorrow, how easy is this? Grab that free pass. Come on, join me as a guest in the trade room, upper right-hand corner. Again, if you're on YouTube, descriptions, right? Go in the description, the links in the description, right? If you're in the blog, grab that free pass. If you're not a member here at School of Trade, what are you waiting for? Grab that free pass. Come join me as a guest. I can guarantee you're going to learn more with me on that free pass than you will anywhere else on the interwebs. If you like the newsletter, you're going to absolutely love that free pass. And then if you have any questions about the free pass, any questions about free trials, membership information, or anything we talk about tonight, don't forget about that live support on the right-hand side of the website. All right, enough of that. Let's jump right in. We got some money to make tomorrow. Let's get this. Tomorrow's Wednesday, February the 28th. Now, I think we settled the debate last night. This is not a leap year, so we are good to go for the end of the month tomorrow. And I appreciate all of those emails I got today confirming that. I wasn't aware there were so many different ways to confirm this was not a leap year. I learned something new every day, so I always appreciate you guys, right, sharing that information with me. All right, let's jump in though. Tomorrow, Wednesday, February 28th. Tomorrow is the last day of the month, right? What do we always talk about last day of the month, right? Volatility. We get a dose of that today. Volatility, right? And those open, high, low, close levels, those prior month high, low, and close levels. We don't have a lot of them on the chart tonight. We kind of shook out a couple of them on the E-minis. We got one on gold I'm watching, so we'll talk more about that in a moment. So don't forget, we oftentimes get increased volatility at the end of the month because volume drops as professional traders back away. They don't want to mess anything up for their month, right? And of course, rookie traders usually take bigger risks. That volatility can be nasty nasty tomorrow, so watch out for that. Also, open high, low close levels. Watch those prior month high, low close levels. They will be magnets tomorrow, and hopefully we can get one right to make us some money tomorrow on the GC. Now, as we look at the news tomorrow, there's not a lot on the calendar. As you can see, we have the GDP number at 8:30. We have the petroleum status report, the weekly inventory report at 10:30. So, of course, the big news on everyone's radar tomorrow will be that GDP, right? Take a look at, right, how the GDP ended, right, for the end of last year. That GDP number 8:30, we want to make sure we trade around that tomorrow. And, of course, you get the big news number for the inventory tomorrow, 10:30 a.m. This obviously will only apply to oil, maybe a little bit of natural gas, right? Catch a tail of that as well. But for the most part, though, oil traders will be affected by that news tomorrow morning at 10:30 a.m. Eastern time. Don't forget, if you're trading oil really on a Wednesday morning, it's early in, early out. I look for trades on Wednesdays ahead of that 10 o'clock top of the hour. Usually after 10 a.m., things start slowing down pretty nasty as traders start to kind of gamble with new positions. They kind of try to get in and out around that news number. Personally, I'm not a big fan of trading the news. I tried that 10 years ago early in my career, and like most people, when you're a rookie, you're inexperienced, you look at a chart, and a lot of times those big news events, they make the markets move, but that movement is so unreliable, you can't really tell which direction. It's very volatile, it's illiquid, it's dangerous, right? So I don't really recommend, in fact, I never recommend you trade during the news. We have so many times during the day we can trade around the news. We don't need to go putting our hard-earned capital at risk during major news events. So two pretty big news events tomorrow morning, right? We got the inventory report at 10:30 and the GDP report, again, end of month. Tomorrow could be a little bit slow because we had some big moves today, which we're going to talk about more about in a moment. But usually that end of month volatility shows up here when we least expect it. So keep your eyes open on that tomorrow. And speaking of tomorrow, don't forget, every morning, Monday through Friday, I open up my trade room at 8 o'clock Eastern time, and we're going to execute this strategy together. All right, speaking of strategy, let's do this. Let's roll up our sleeves. Let's get this end of the month strategy ready to go here for tomorrow. Starting off tonight, we'll go crude oil, then over to the S&P, then Nasdaq, gold, and we'll wrap up on the euro tonight, and we'll send you guys off into the last few drops of February for tomorrow. Starting off tonight on crude oil, crude is bearish and trying to finish off a fourth measured leg lower, but this closing candle looks like sellers have stopped selling low, and this is likely to start trading sideways into a range ahead of tomorrow's inventory report. Anytime I see a trading range, I now focus my focus shifts now from selling pullbacks now to selling traps, selling failures, using the 2-try rule up around the high of that range. My only concern for oil tomorrow, this is a relatively big move down. A lot of times when we see a big move in one direction, we will end up going sideways right into the following session. And with tomorrow being an inventory day, we've got to get to it early, right? So time is of the essence for all you oil traders tomorrow ahead of the inventory report. So a couple things here on the chart right now. A couple things here. First of all, we have kind of a funky channel, and basically what happened this morning is we had the new Fed chairperson Powell, right? He testified in front of Congress this morning at 10 o'clock Eastern time. He talked about increasing rates. He pretty much boosted the dollar, right? Everything he said this morning, higher rates, right? Basically removing the punch bowl, as they say, right? And that was good for the dollar. What was good for the dollar ended up dragging most of these markets lower here today. Gold, obviously oil, and the E-minis. So with that dragging down here today, right, we obviously know we're bearish, but it really created some really kind of weird channels. You'll notice that tonight the S&P is a little bit funky, Crude's a little bit funky as well. So there's going to be a couple different ways in which you could draw these. You're going to see a lot of these channels tonight. I'll go over a couple variations of this. This one really, I think is pretty self-explanatory here. We're coming off that bullishness, right, and turned bearish short after we opened up in this morning's trade room, right? Draw off those lows. That seems to fit pretty well off of that high, and that creates my bear channel. Now, of course, anytime I have a channel, right, I always talk about look for that up, right, and back down again. So that's what the channel tells me, right? Channel tells me look left, find some of these prior swings. Let's get this market up so we can sell it back down. What else do we have in the chart here? Measured moves. I have one leg, two legs, three legs, almost four legs down. Now, I talked about this last night on the newsletter. Usually when a market goes almost four legs, it's usually due for, I don't want to say a reversal, but a substantial correction. A measured move is two legs, right? Triple measured moves are somewhat common, but four legs without a major correction it's uncommon, right? A lot of times what'll happen though is we'll get down to that fourth leg and the market will kind of just sit there for a while, right? So we may end up seeing the market kind of get pinned, right, to its low, but it usually has a hard time going through a fourth leg lower. Now you might look at this and go, no, it's right. It's a larger measured move down. I don't see that. I don't see evidence of that right now. All I do see is 1, 2, 3, and then again 4. So, I'm looking at some pretty significant support down here at 62.58. And then right below that, we have a key support level here down at 62.33. So this whole area here, you really want to be careful as we go lower tomorrow. If we do end up pushing lower, you really want to focus on those traps, right, as we kind of peel off of those lows. Just because, again, we get some major support, four legs down. The kind of the next thing here would be this falling resistance. If we take this trend line, draw this trend line down, right, that creates some falling resistance. That creates a beautiful spot now where we can possibly combine the trend line resistance, the top of a range, which I haven't discussed yet with you, and of course that little trap high, right, which is what we look for whenever we have a perfect channel like we're seeing here right now, right? So that trend line is there. And then as I mentioned in the introduction, all of this is important, but I think the most important clue is that last candle of the session. A big wick at the bottom, and look what happens, right? It's right kind of holding right at that low there, almost like it kind of just slingshots right back into that range. This is a good example of what a market looks like when sellers are taking profit at the lows. You can definitely tell they didn't all jump out, right? Because this would have really bounced off these lows. But it doesn't look like sellers are eager to be selling to new lows right now. Now, obviously, we finished the day literally at the low of day. So there is no doubt about the bears have control. It is a very strong trend, but I do when I look at four legs down, right? When I look at this candlestick just above that measure, these are the clues now. They start kind of piling on here. They may not be fire yet, but there's definitely smoke. And that smoke tells me to be aware. We may see a relatively strong correction here before we can get sellers back in the building again to start selling again. So we're bearish. Anytime I'm bearish, I want to sell at resistance. If we do bounce higher here, though, if we do bounce higher, which I assume we will from what we see right now, let's talk about up, let's talk about down, let's talk about sideways, right? So these are three scenarios I always want to be ready for tomorrow. First, what if price goes higher, right? Well, there's a couple of different options here. One option would be the simple option, would be up above the moving average. Buyers try to reverse the trend by buying the pullback to the moving average. We have resistance coming down. We've got resistance up here, right? So of course, I'm looking for a failure. That failure pattern will often produce strength. That strength pattern then will pull back to the moving average, and we can look for the sell from there, right? So buyer failure, strength into pullback, and pullback, back down we go. It might be a little bit more complex than that. We may see a trend line forming here, right? One leg up, pull back, two legs up, calls two-legged pullback, right? We could look for that sell off of that trend line as well, right? Kind of double up those trend lines, if you will, right, to go back down. What if price goes sideways, right? What if we go sideways? Like I mentioned, right, we're definitely bearish, and we finished right at today's low. So I'm definitely not thinking the bulls have control right now. So if we don't see profit taking, And if this price continues to kind of sit here quietly, either above the measured move or on top of the measured move, you know what I mean, right? If we just start sitting here quiet like, if we start seeing some double bottoms forming here, then I can be a little bit more aggressive at selling, right, up around these highs. I don't need to be as patient to wait for the top of that, right, of this major range, although that would be really ideal. But if we come in tomorrow, you know, and we're sitting there, you know, 8:30, 8:45, 9 o'clock Eastern time, and we're not bouncing off of this low, right? Remember, right, if we're bouncing off of this low, this is definitely a range. That is your range right there, and I want to sell off the high of that range tomorrow, right? But again, you know, if we don't bounce off the range, right, if we're going to sit here for a while, you know, hanging out around that measured move, that tells me we have a lot more interest to the downside. We're not seeing profit taking. We're definitely not seeing buyers into the market either. So what I can do is, obviously, I can use maybe the gap up here at 63.08, 1, 2, right? Obviously, get that trend line, right, coming down. That will be ideal as well, right? Use that as kind of a little bit of an area of resistance there above that 2-try rule. All right, what if price goes lower here? If price goes lower, it doesn't really change very much. I will expect them to go down and finish off, right, maybe through the measured move into the low of that channel, and then we can look for that sell, right, off of the channel high, right, off of that prior level of support, which we can then use, right, as a level of resistance. So relatively simple. Just the key is if price does keep going lower tomorrow, we do want to make sure we don't sell at support. We want to sell at resistance, and that resistance, of course, will come up at the top of that channel. Now, obviously here we've got inventories tomorrow, right? 10 o'clock Eastern time, we have the inventory report. I always want to remind you, those inventory reports, they oftentimes lead to major reversals, okay? So do not be surprised if this big mammoth, right, news report we have every Wednesday morning, tomorrow it's at 10:30, right? Don't be surprised if that results in a reversal. How does a market reverse, though? There are 3 things we look for. One is strength, right? So bears have control. If you want to go back to being a bull, we need a strong move up above the moving average. Now remember, that strong move is not enough to reverse the trend, because as it pulls back to the moving average, if those buyers can't hold and run, you're going to see sellers come in and attack below that moving average. They're going to sell that sucker back down again, right? So the buyers have to show us they could strong move up, pull back, try to use that trend line if at all possible, and then I want to see a very strong move going higher, right? The term that I always use to describe this is the disconnect. What's going to happen is you're going to feel it, right? The market will just disconnect from sellers. The sellers will bail on this. The market will run higher. When that happens, that's when we know we have a new bull trend. Now, a lot of times you can draw a trend line off of this low up to that high, right? And then, of course, buy on that pullback back to that low, right? But most of the time, though, when you see those reversals, it really runs hard. It runs really hard. And so what I tell my clients to do is rather than draw the trend line here, you know, don't get me wrong, that trend line will act as support. What I'll do is I'll draw a trend line from the high to the high, bring that up, create a hidden channel, and use that hidden channel, right, for my next buying opportunity. That's usually going to be a more reliable opportunity there to be a buyer. So keep that in mind if we do get the reversal tomorrow. Don't be surprised if it goes sideways early in the session, again, because of this major news tomorrow morning. Let's keep rolling. From the crude oil now over to the S&P. S&P is bearish, pretty obviously here the bearish. Right? Bears have control. We have a multi-tiered channel and a measured move target waiting below here. Now, this channel wasn't very easy to find. I mean, you know, looking at it now, it looks pretty obvious, but it may also be a wedge also. You know, that tells us if this is a wedge, this market has a lot more room to run lower. But no matter what the pattern, whether it's a bear channel, right, or if it's a wedge, right, we know the bears have control. There's a real strong move down, and we know that we're going to be looking for selling opportunities up at resistance levels on the way down to that measured move. Now, as I mentioned earlier, anytime I see this, I think I talked about it earlier on crude oil, but I talk about this quite a bit on my newsletter. Anytime we have a reversal, right, like we did today, you know, of course, in the wake of the Fed speech today, Whenever we have a reversal, I'm always looking for, right, that hidden channel off of that low, right? The problem is it doesn't really fit very well, right? We draw that down, we draw it down, it just doesn't fit very well, right? That channel doesn't fit very well. And I thought, all right, let's draw it off these lows, pop it to the highs. Okay, so that fits really well. So that looks like that's the best fit. But you'll notice we're not getting great rotation, right? This one doesn't rotate higher. This one doesn't rotate lower. It's not, if you're a client of mine, you know exactly what I'm talking about, right? In order for me to have the most amount of trust in my analysis, rotation is so important, whether it be range rotation or channel rotation. So, of course, I added a midline in here. That midline is giving me a lot more proof here, right, that this is the right channel. It's just a real weird kind of multi-tiered channel. Again, obviously in hindsight, looking at it right now as I've done it all, finished up the analysis, yeah, it's pretty obvious that, right, that is the high, but, again, we're not getting that rotation back down. So a little bit of a curveball on this one, right? Usually we can get those channels to fit pretty well. That leads me to my next point. If you take these lows and connect these lows, it does seem like this has a little bit of a wedge pattern written all over it. And this is what brings me to waiting for a nice trap high up in that battle zone. The one thing about a wedge, and again, this wedge isn't perfect either, because you'll notice this little low doesn't test the wedge low either. So, nothing really a given or a guarantee right now. Now, here's what you want to remember about a wedge. Wedges are really great as long as the wedge is wide enough. We can trade inside that wedge. But once the wedge starts getting really narrow, right, the reason why this is important is because in a narrowing wedge like this, as it gets narrower and narrower, now experienced traders are very worried about selling the high of the wedge because there just isn't a lot of room for a profit target, right? If I can sell the high of a wedge up here, there's plenty of space to go back down to the low of that wedge. Does that make sense? Right? Plenty of space inside for the low of that wedge. Once I get into the narrow part of this wedge now there isn't that much open space. And what usually happens when that occurs is we see the price jump up to an area of resistance, just basically so sellers can have a lot more meat on the bone. That's really one of the simplest ways to think about how to increase your odds of success. If you're in a bear market, sell at resistance, but make sure you're at a resistance level where you can take a small amount of risk for a nice big amount of reward. See, if I try to do the same thing right at the top of this wedge, there's not nearly the amount of profit potential, right? And I still have to use pretty much the same amount of risk, right? So if I had a choice of whether I want to trade inside of a narrow wedge, right, or if I wanted to trade inside of outside of that wedge, what would you do, right? So this is why you've always got to be thinking as a trader, right, where can I get the most value for the risk I have to take? Where can I get a small amount of risk for a big amount of reward, right? And that's why the wedge is important to mention, because if it is going to be a wedge, then we're starting to get, well, first of all, right, that wedge, if this really is a wedge, we have some significant targets waiting here, because if I draw this, right, this thing out here now, right, look at that target. This thing goes all the way back to that 2,700. Right, so we've got a big ways to go if this is setting up here for a wedge tomorrow. Nonetheless, though, no matter whether it's a channel, right, or it's a wedge, we've got some measured move targets waiting here below, right? Big leg down, right? Next leg lower. Now, you might be asking, well, Joe, why not do this? Why not 1, 2? Because it doesn't fit. It doesn't fit, right? This move lower, right? That move lower is not the same as that move lower, right? So these are not symmetrical legs, unlike on oil where they were all symmetrical. So we have to assume now that's one leg, right? And that's a second leg. So we got some support waiting down here too. So between an ugly channel, right? It's an ugly channel, it is, right? A possible wedge and that major support level down here. Yeah, you can see why now I'm a little bit weary to be selling as the market goes lower. So you know me, anytime I see a good-looking channel, I'm always looking for that two-legged move up to resistance and then sell back down to that low, right? If we go sideways here, look for a range, same thing, right? Back down to that low. If it goes lower here, right? I don't want to sell the low of that channel. I'm looking to sell right up around the high of that channel, right? So up, down, sideways. The bears definitely have control. If we go higher here, watch that trend line. One two-legged pullback, moving average usually comes over, failure at the moving average into strength into pullback, and then pullback back down. So as you can see here, right, you've got the sell off the trend line. That's the most aggressive. It also has the most amount of profit. Then you have the failure at the moving average. That's my favorite, right? And then of course you have, right, your breakout pullback below the moving average going right back down to those lows. As you can see, I'm not trying to predict the top here, right? I have no problem waiting for it to go up, right? Don't try to predict the top, right? Wait for it to stall out, and then once it rolls over, right, now you've got that move back down. You don't need to be the first one into that move back down. One of the great things about futures is leverage. We don't need a huge move to make some great profit, right? And what I'd rather have you do is look for smaller, more reliable opportunities, build your account size up to a large account, right? And then go in the big position size, and a small move can make you your week's worth of profit. We'll talk more about that in our classroom sessions here at School of Trade. So we know the plan if price goes higher, right? What if price goes sideways? It doesn't look like the case right now, right? But if we come out tomorrow and we're seeing this market is sitting here right now, I don't want to sell into that measured move. So we'll go up, one try, two try. We saw some great examples today in the trade room, the two try rule, right? And we'll sell, back down we go. If we do keep going lower, again, if we go lower here, right? Let's get that moving average down. Let's get that move up, right? So we can sell off of that high. Maybe we get a chance to use that measured move as resistance. Okay, so get that move down. And again, as I always remind you, as the market goes lower in a bear market, there's no gun to your head. Nobody's forcing you to pull the trigger and sell short. I know it may seem like you have to. I know it's almost compulsory, right? It's almost compulsive for sellers to jump in as the market is going lower. It's very difficult to resist the temptation as the market moves lower. If you have any experience with real money at risk, you know how difficult it is to resist that move going lower. But rather than sell it there, better to sell it right up around levels of resistance. Just follow that real simple rule. All right, let's keep going. From the S&P now over to the Nasdaq, and you'll immediately see the very big, important difference here, right, on the Nasdaq. Nasdaq is obviously bearish. This is just like the S&P. But look at this shallow, almost flat spike and channel pattern. What does that tell me? It tells me the trend is definitely bearish, but it isn't very strong. And I should stay patient and focus on selling at overhead resistance levels with buyer failures above the moving average tomorrow morning. See, this is a great example of a bear market, but unlike the S&P, right? So the S&P, right, on the S&P, the buyers aren't involved in this market right now, right? This is just sellers. So once I get back to resistance, I'm looking for sell patterns, right, going back down again. At the same time, look at the Nasdaq. The Nasdaq has almost a flat channel to it, right? Now, flat channels are basically like ranges, right? I mean, if you really looked at it, you could say, you know what? This is kind of like a range right here. See that right there? Yeah, see, it's kind of like a range, right? And now at the bottom of that range here. So the difference is that in a market like this, you have buyers involved because it's not sharp enough of a trend to run out anyone that tries to go against the trend. You know, buyers can buy the low of this channel and they got plenty of room to go back to the high. Then the sellers can come in and sell it back down again. They can't do that on a market like the S&P and oil today, right? It was too strong. It was too strong going lower. So the moral of the story is whenever I see a real shallow channel like this, right, and a good kind of rule of thumb is just draw a 45-degree angle on your chart. If it's less than a 45-degree angle, then you've got to be a little concerned about the strength of that trend. Okay, this is a relatively mild trend, right? Shallow, almost flat channel. So as you can see here now, I can't sell the moving average, right? I'm not selling pullbacks. This is a completely different strategy now. It's more like a range-bound strategy. So you have to know, is the trend strong, right? Is the trend weak? We obviously know they're bearish. And if the trend's weak like this, we have to assume there'll be buyers involved. When there's buyers involved, that means a kind of a flat trend. I want to now trade it like a range. Up, one try, two try, and then back down in, right? Just like we saw here. Get up above the moving average, wait for those bulls to try again, and then sell that second try, right, going lower. So one try, two try, moving average comes over, right, and we look for that failure, right, back down in. So when the trend is weak, we look to get above the moving average, up traps, up buyer failures, up above the moving average, and really try to get as high as we can on the chart, because again, we know that buyers are going to be able to buy the lows, right? And sellers are taking profit quickly at those lows. So we don't want to get caught trying to be too aggressive on a market like this. Get it up so we can sell it back down. I got my eyes on these prior levels of resistance overhead, obviously the top of this, right, channel, or you might disagree with me, right? You might call this a range. Whatever the case may be, I want to get it up so I can sell it back down again. Now, again, it could be as easy as just one try, right? Two try. Moving average comes over, failure, pullback, right, and back down again. It might be as easy as the failure into the pullback coming down. Maybe it's a little bit more difficult, right? Maybe it's something like this. We go up, use that trend line, get below that trend line, right, and then come back down, right? So we'll watch and see how that, right, how that develops. What if price goes sideways down here? You know, again, big news today, big speech today from Powell, right? How do we trade this if we aren't going any lower here? Yeah, it's a range, right? So if we see a range develop down the low of this range, you know, we come in tomorrow, 920, 930, 945, and we're seeing the market going sideways, pinned right at its lows. Now everything just shifts lower, and we look for that one try, right, two try, and sell back down. Hopefully we get a chance to use, right, some of that resistance here tomorrow to sell back down again. So get up off of these lows. Be very careful as this market goes, right, as this market goes lower. And, you know, speaking of which, if it does go lower, right, hey, no big deal. Let's just say, for example, here, right, overnight, we push lower here overnight, we pull back. We'll look for another variation, right, of that channel, right? So no big deal. If the market pushes lower here, don't freak out, right? Don't just sell low. Don't think the plan's busted. Just revise that channel, bring it down a little bit lower. Obviously, it'd be a great thing, right, for the bears to see this price go lower. It'll give us a little more confidence, right, in this trend going lower here. But that will, right, be patient, wait to sell, back up overhead. Last but not least, how do we reverse? Yeah, this is definitely a market that could easily reverse tomorrow, right? Because of the kind of shallowness of this trend. What does it take here? It takes a strong move up, right? Strength. That's the first thing. Strength, 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 right? Pull back to the moving average. Okay, and then what? And then explosive move higher. That's the key. The key word is the pop, 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 right? That explosive move higher, that disconnect, right, from the bears in the market. The bears realize they're wrong. They get out. When they get out, they become buyers. You got buyers buying. You got sellers buying, and the price will jump, right? And then, of course, at that point, we find our measured move. We find our new channel, right? And we look to buy that pullback, right, to that channel, because the buyers are trying to retest that 7,000 area, and we'll try to get in on that before we get there. All right, guys, don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to do this together. How about some gold here tonight? The yellow metal, boy, that gold trying to get that prior month low. We're bearish and trying to finish this move down to January's low. As I mentioned earlier on in the week, end of the month coming right around the corner here, those prior month high, low close levels are definitely on our radar. I've got my eyes on a channel, a reversal line, and a falling trend line, resistance line as key levels to be used for selling opportunities tomorrow morning. Now, this one is interesting. We definitely have some various components here. First of all, this, for the most part, this big kind of slaughter here of the bulls today, right, this extremely aggressive move down on gold was in the wake of that Fed speech this morning, right, at 10 o'clock Eastern time, which is talking up the dollar, and that pushed down gold. Oftentimes, these moves are relatively short-lived, and we see a strong correction kind of get the market back into balance before we make that next leg lower. So I do want to remind you, most of this move today was on the dollar moving higher again by the comments of Jerome Powell this morning, talking about increased rates, talking about the fact that we can't fiscally sustain this for much longer, which we've all kind of known for a long time. But our Fed chairperson refused to say the words. So he actually said the words today, and you saw what happened, right? The markets reacted. Now, this could be completely wiped out tomorrow, right? So again, the moral of the story is this whole move down came on news. And when that happens, a lot of times the following day can be a very big correction, almost as if to kind of balance things out a little bit and then let the market do what it wants to do from there. So that's one factor going into tomorrow. Another factor is that prior month low. That prior month low is staring us right in the face, right? Kind of egging us on, right? Antagonizing me right now to sell this thing because you don't want to miss out, right? There's a sense of urgency in the market to get down to that prior month low. So as you can see, those are two conflicting kind of forces of nature right now. You've got that prior month low trying to drag the market lower. At the same time, you've got this whole move down today in the wake of that major news, which oftentimes produces a bit of a correction before we resume that move down. So those are two forces going against each other right now. So it might be a little bit sloppy here for tomorrow. At the same time, I love this reversal line at 24.9, and I especially love the fact that it connects to that falling resistance, and this becomes a beautiful area overhead here, right, for a battle zone. At the same time here, we may not go that far, right? We may only get this thing back above the prior swing at 20.4. So we're definitely watching those key levels of resistance here. Obviously, you can see here another kind of ugly channel, right? You can draw the channel off the highs here, but that doesn't really fit very well, right? You could also draw the channel off of these lows, right, to define them off that low. That doesn't make a lot of sense, right? So I'm really looking at this right now, the best of my abilities to find a channel that really fits well, and this is about all I can find here right now. We know we have a trending market, so we know we're looking for channels. We know we're looking for measured moves. That's another thing too. There really isn't much of a measured move, right? These don't line up, right? They just don't line up. They're not symmetrical, and that happens a lot when there's some other force coming out, such as, right, our Fed Chairman Powell speaking about the dollar this morning, right? So there's a lot of things here that are coming into play right now. What do we know? We know the bears have control. What do we know? We know that anytime the bears have control, we're going to look at sell at resistance on the way down to a major objective, right? The major objective is that prior month low. Where is my level of resistance? It's up at the top of this channel. My level of resistance up at the reversal line. In all reality, this whole area here, right, could be our battle zone here for tomorrow, but I really like that reversal line. So first things first here, I'd love to see us make another leg higher. Get that. Let's do this real quick. There you go. I'd love to see us make another leg higher, run into that, right into that trend line, run into that battle zone, failure, strength, pullback, right, and then grab it on the way back down again. That would be great, right? That would obviously free up some extra space there. Obviously, if price goes higher, we may only get above that high, right? Failure here above the moving average, right? Into strength back down. That will work as well because we have the top of that channel and that 20.4 here as well, right? If we just sink back down to that low, then we got to watch and see what happens, right? If we sink back down to that low and we run through that low, then we know we're looking to sell right up at resistance. Okay, if we sink back down to that low and bounce off of that low, now this becomes a trading range. Okay, and what do we know about a trading range? One try, two try, one try, two try, back down in we go, right? One try, two try, back down in we go. Okay, so these are the variables if price goes lower tomorrow, right? And obviously if we see price going sideways, we'll look for that to be a range, right? So sideways, right? If we do end up making double bottom here, sideways, one try, two try, back down in. If we roll lower, selling high, right? If we go higher, failure, break, pullback and back down again. Same pattern I've been talking about, right, every evening on our nightly newsletter. How do we reverse? What's the step to reverse this market? Well, the key to reversal right now, you're just going to be wary of that trend line. So we're going to want to see a strength, pullback, strength, but then you'll want to make sure you get above that trend line most likely, right, and grab it from there. I would imagine that's going to be, right, your best bet there for tomorrow. All right, so just be aware of buying into that trend line, try to get above it if we possibly can, or it's got to reverse a lot faster, right? So maybe it goes down like this, and then it goes up, right? And then from there, then we can be buying before we get to that trend line. Just make sure you're aware of your surroundings. We don't want to buy into resistance. So again, some conflicting signals here. We got some news that sent price lower, right? This may correct because of that tomorrow. Prior month low is definitely a magnet here for us. And of course, we got that big round number at 1,300 tomorrow if we happen to really get a continuation of this move lower here. Wrapping up tonight here on the euro. Place your bets, folks. What are we going to do? Now, so the euro, it looks pretty bearish, doesn't it? Yeah, it definitely does. Euro's range bound still, though. But the sellers, they are definitely giving it the old heave-ho right now, trying to break the low of this range. And I'm watching the sellers now. They've tried once, they're trying twice, and we're going to find out, right, if they have what it takes to break outside of this trading range here right now. This is a very, very good-looking chart here. And really, no matter what happens tomorrow, this is a really good lesson that every new trader needs to learn. When we have ourselves in a range, I mean, you would look at this, it's like, holy Christmas, this is like a postcard perfect range. It's obvious, right? It's a clear range. Been watching this range. Our focus lately has been buying low, selling high, right? And using the 2-try rule. Well, now we have this really strong move down, right? And you can thank my buddy Jerome Powell on this one, right? Again, talking up the dollar, right? The dollar index, the biggest part of the dollar index is the euro. So if the dollar is going higher, the euro has to go lower just by the law of, right, the law of math, right? 63% of the dollar index, right, is the euro. So, right, by definition, if the dollar goes higher, the euro will go lower. So that's why a lot of people like to follow that dollar index. I personally don't recommend new traders try to incorporate the dollar correlation into their trading because the dollar correlation doesn't give you very much to work with. You know, everyone says, well, the dollar moved higher, so I should sell the euro. Okay, so but where do you sell? See, that's the problem, right? Don't get too wrapped up in the dollar, right, correlation. Okay, I'm telling you right now, trust me, okay? I've been doing this for a very long time. If there was an edge that I could get from using the dollar, right? Remember, the dollar's on the ICE exchange out of London. Well, it's actually out of the U.S., but they do it in London to save on taxes, but I'll leave that to myself. I'll leave that for another video. But the reality is the dollar index, right? It's not a CME mark. It's on the ICE exchange, right, in London. Again, it's a U.S. exchange in London, right? The beauty of our tax strategies here in the U.S. But the bottom line, though, is that a lot of people ask me, why don't we have a dollar chart up? You know, why don't I have a chart of the dollar up? And I say, because tell me how to use it. Tell me how you can use the dollar correlation to make money as a day trader. And that's the problem. Yeah, the dollar goes higher, the euro goes lower. I don't need the dollar to tell me we're bearish. That's the thing, right? I don't need the dollar to tell me that the euro's bearish. I can see it with my own two eyes. And you go, well, yeah, but, you know, the dollar does this. And well, okay. But again, if we're bearish, I don't need the dollar to tell me where to get in, where to get out. I'm going to use the euro. So what I'm getting at right now is just if you're new to this stuff, just be really weary about people trying to sell you a bunch of goods on. You got to have the dollar index correlation. Trust me, right? I've gone down that rabbit hole too many times. Okay, the problem is yes, the dollar will help you with direction, but last time I checked, that's the easy part. I didn't need the dollar going higher to tell me the euro was going lower. Okay, give me something I can actually use to tell me where to sell the pullback, where to place my stop, where to place my targets. The dollar correlation is not going to give that to you. Okay, now if you're a global macroeconomic, right, you're looking at long-term fundamental trading, then sure, go to town, right? But if you're a lonely day trader like me, sitting at your desk at home, looking at a bunch of charts on an intraday basis, all the dollar correlation will do is frustrate you, because it's not going to give you really any edge. It won't tell you where to get in, and it won't tell you where to get out, and that's all that really matters. Direction is easy, up or down, right? Simple as that. Okay, so I'm off my soapbox now. Okay, so be careful of that dollar index strategy. Okay, because again, what happened this morning was, right, Fed speaker speaks up the dollar. It causes, right, all the other markets to go lower. Did I need the dollar to know that we're going lower? No. Just look at the darn chart. Okay, then once we know we're going lower, put it in context and then plan your strategy from there. So we know the seller's going lower here. Sorry about that rant real quick. I'm back to normal now. All right, so now we have this trading range, right? Dollar goes higher, right? Thank you to Jerome, right? We go lower. Does that change the fact that we're inside of a range? No. It definitely is a big, strong move down. Doesn't change very much, though. Now, one of the things I always look for when it comes to a range, and I highlighted it right here, and that is the two-try rule. Okay, anytime we see a two-try rule, right? One try, pull back, two try, you want it to go greater than the first try. So one try down, two tries. What I really want to see is a new lower low, then followed by a jump, pull back, and go. That would be the absolutely ideal scenario for tomorrow. Okay, so it's a lower low, and I know it's going to seem really crazy because you're like, wait a second, you think it's going to go higher after a lower low? Yes. Okay, because what that will do is that will trigger in breakout sellers. I can guarantee you right now there are a lot of sellers waiting below that low. Okay, and there are probably a lot of buyers whose stop losses are there. Okay, and when they get triggered, they're going to become sellers. So the price will oftentimes, right, with all those stops sitting down here, all those breakout traders waiting to sell, there are buyers with their stop losses down there. There are sellers with their stop orders to get into the trade. What happens a lot of times is it'll come down nice and strong, it'll push back, it'll push through, and then what will happen is that moving average, right, it'll come back, it'll chop, 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 and then all of a sudden it goes bam, right? And what that does is that is the sellers who got roped into this market lower. Now they're stuck and they're in big time pain. So the sellers get out, the bears become bulls, right? That's the only way to get out of a bear market, right? The only way to get out of a sell is to be a buyer, right? So buyers start flooding the market. We don't want to chase this up here because then you're buying high. So what do? We look for that pullback and we go looking for buying pullbacks there. Right? So don't try to predict the reversal. Wait for that failure and then bam, up above the moving average, grab that pullback, right? And you're off the races going back up into that range. Okay, that would be the ideal, right? Lower low, get those sellers in, right? Get them into the market. Okay, that's why I say, right? Because right back here, when this thing went to a new high, what happened? Breakout buyers getting in. What else happened? Sellers, right, got stopped out. Then the buyers, once the market starts going lower, what happens? The buyers freak out. They sell out of their positions. And all the sellers who got stopped out, they get to jump in now and chase after it. Can you see both sides of the market participating in that move and why it sends the price back into the range? That is the psychology that you have to understand. This is what indicators don't give you. This is what most trading books don't address. This is what took me the last 10 years of my life to slowly learn, right? You really can't get this, right, from a set of indicators won't do it. I don't care how good your order flow skills are. That's the psychology is that is the holy grail. You've got to be thinking about the different people that are in the market right now, right? So as they try to go lower, right, trap, bam, pull back and back up in. Now, we may also see it, right, stall out here. You can see there's been one try to go lower. There's been two tries to go lower. So we may not get that lower low. Hopefully we do, right? This is now what I call the two-try rule. It's a kind of a nested two-try rule, right? It's two tries to retest that low, right? If they fail here, jump back up. We're in to go. The key is going to be that strength, right? Get that strength. Get that really nice jump higher here, right? And then up we go from there, okay? Now, as we go lower here right now, right? As we go lower here right now, how do we know if the market goes? How do we know if it turned bearish? Right? Could this be a real breakout? Absolutely it could. Look at the strength of this thing, right? I am not saying this can't go lower. What I am saying though is a strong move, a pullback to the moving average. They have to show me some proof right now, right? I want to see this thing fall apart. And if it does fall apart, you know what I'm going to say, right? Find that hidden channel and let's do this, right? I don't care about being a buyer or a seller. All I care about, right, is making money and helping my clients. Okay? Use that prior level of support as resistance. But again, we got to see a really strong move down here. Show me proof, right? Not just a little touch, right, and then go. I want to see proof, right? You can already see that candlestick right now overnight, right? You already see it kind of fading off that level, right? So buyers, bam, pull back, go, right? Sellers, run this thing. Hidden channel, right? Selling off down to that low, and we'll worry about those long-term targets, right, once we get down there tomorrow morning. All right, guys? So very, very important chart here on the euro. We've talked about that dollar index correlation strategy, which, again, it's valuable for direction, but you don't need direction. Direction is the easy part, right? So be careful about that dollar index, right? The 2-try rule. We have 2 examples right now. 1 try, 2 try, go in the big picture, and the nested 2 try, get back above, right, and then go back in from there. And then again, I'm not opposed to being a seller. I just need to, right? I want you to understand that it's all about the context of the market. It was a range, therefore, big move down, you got to show me proof if you want me to trust, right, this range breakout. Because if not, buyers are going to attack this thing because there is a ton of money on the table right now going back to the middle of that range. That will be your big target going back up, right? And then from there, we'll look for it. Do it again, right back down again. All right, guys? Excellent work. We get a range on euro. Other than that, though, some pretty strong trends. Don't forget about oil tomorrow, right? Oil, again, as I mentioned earlier, has that big inventory report. Boy, oh boy, we're almost an hour into this video right now. I can't even believe how much time flies here. Thank you so much for sticking around here with me late tonight. I try to add as much value as I can into this nightly newsletter. Got any feedback for me, right? What do you love? What do you hate? Drop me a comment, right, on the YouTube channel. Send me an email. My email address is jj@schooloftrade.com. While you're here, don't forget, join our free trial. We get the best free trial in the business, I think. I'm a little bit biased, obviously, but if you're on the blog right now, the links are on the right-hand side. If you're on the YouTube channel, the links are in the description, right? I think we have a great free trial. If you like my newsletter, you'll love my free trial. Learn more about how we actually put this to work every day in our trade room. And then while you're here, don't forget, we got beginner, intermediate, and very flexible payment terms, right, as we go into the springtime season here for our advanced membership. And if you have any questions, you know where to reach me. My name is Joseph. Thank you so much for sticking around tonight. Be well out there. Be nice to each other, will you? And have fun on this final day of February tomorrow. If I don't see you guys tomorrow morning, 8 o'clock Eastern time in the trade room, I'll see you same time, same place tomorrow night. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.